Um, what just happened in the markets? Because today was a decent day until pretty much just a second ago, and we're seeing tank, 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 literally a tank. Because Israel attacks Iran over its nuclear program. So a new conflict in the Middle East has started, and a state of emergency declared as Israel braces for retaliation. And of course, this causes markets to tank. But why does Israel and Iran impact US stocks? I mean, just curious because they don't have nothing to do with the US, right? Well, not so fast. That's actually wrong. So, wars a main cause of uncertainty, and uncertainty is toxic for stocks. War equals chaos, and chaos equals unpredictable outcomes. And investors hate not knowing what's next because can an escalation happen? And what does the escalation mean? Will oil prices spike? Which has happened? Will global trade get impacted because of this war? And when this big unknown hits, money happens to move to safety. And it makes sense based on these graphs that we're looking at because both bonds and gold are trending up in after hours while US stock futures are tanking, and stocks and after hours trading are tanking right now. Now, with gold and bonds being the safer haven, that makes sense as to why people are doing that and selling some of their stocks. Some people might even be going cash just to really have more of a defensive play right now because of the uncertainty. That could cause a macro shock to happen because oil supply risk becomes a factor, and oil price can impact inflation. Iran is a major player in the oil supply, so inflation risk up. That's not so, like, that doesn't sound good right now. We've been hoping inflation comes down. And then the tariff impact on top of that. Does the US get pulled in? And does the US getting pulled in cause a much wider conflict to occur? And is there a potential global slowdown that can occur from this? Supply chains being disrupted. All of that sounds like bad news. So people would just prefer, hey, like right now, I just want to take my cards off the table, maybe get out of margin. If I'm going to hold the stocks, oh my gosh, they just keep going down, down, baby, down. Right as we're getting near all-time highs, like I wanted to talk about just the news that we got because today was primarily a decent day in the market. Individual traders feel pretty good about stocks with their expectations of a market that falls for the within the next 6 months. That fell to 33.6%, which is the lowest it's been since January, according to a latest survey by the American Association of Individual Investors. We're still near all-time highs on most of these charts. Oh no, on Bitcoin that almost looks like a triple top. Not all the way, but just similar-ish. But all of these are near all-time highs except bonds, which is interesting. But yeah, people were feeling pretty good about the stock market until like literally 10 minutes ago. And this comes as the market was approaching its all-time highs. Like how perfect could the timing have been? And then the talk of the big beautiful bill. That's pretty much what we heard from Trump today. The great big beautiful bill will grow the economy like it never has before. At the same time, it is cutting expenses by $1.6 trillion. It puts our country on the right track, plus make America great again. But it's supposed to increase the deficit though, right? On the other hand, we got another survey though, so individual investors were feeling pretty optimistic until this pretty much war seemed to break out. Like everything's just tanking. Insurance professionals. So on the other hand, we got this survey conducted, and this was through March 29th through April 22nd, so right around Liberation Day. And Goldman Sachs surveyed 100 insurance professionals, and pretty much what we got out of it is that in the survey of more than 100 insurance professionals, 76% said an economic slump or recession is the biggest macroeconomic risk, and 79% said a recession is likely to occur within 2 years. I wonder what this same survey would say if like they like called them up right now, all of them, and said Hey, let me ask you that same question again. How do you feel now? And I bet these were pretty high. So insurance agents are known for, like, you don't need it until you need it. That little saying about insurance. So any of them that were hedged right now, they're probably going to be looking pretty good because some of these hedges are performing pretty good right now. So all of this is interesting, all of these moves. We're going to keep on watching this and see how this happens. We also got some data today, some PPI data. This measures wholesale prices, and what wholesale prices reflect are the costs that businesses pay. And think about it, they pay for these supplies and products and then they sell to consumers. And they jack up the price a little bit, but watching these prices kind of tell us how prices may move in the future depending on what these wholesale prices look like. And what we've seen on this PPI report is that it didn't climb very much, and many people were expecting this one, just like CPI, to have trended up a little bit because of tariffs, but I mean, it was pretty soft. So PPI rose 0.1% in May, seasonally adjusted, and many people expected this to come in at 0.2%. So it was a little soft, but yeah, this was interesting considering that many people were expecting this one to come in a little hot because of tariffs. We also seen that PPI in May rose at a 2.7%, 2.6% annually, matching expectations. People were expecting it to come in. So that's what we got on PPI and wholesale. It was kind of soft, mainly driven by services. Now, we also got some jobless claims data. What we've seen is that initial claims was 248,000. This is an 8-month high. Um, so another record. What does this one say right here? This is the highest level for this average since August 26, 2023, when it was 245,000. New claims rose up to 244,752. And by the way, the jobless claims were expected to come in at 244,000. So, I mean, it was a little bit higher, but it wasn't like crazy higher though than the forecast expected. Now, continuing claims, this is an interesting one. Insured unemployment during the week ended May 31st was 1,956,000, an increase of 54,000 from a previous week revised level. This is the highest level since November 13th, 2021. So yet another record. More people are needing these unemployment benefits, and that's what continuing claims follows. We also had that treasury auction today. So what we've seen from the treasury auction is that bond investors, um, so it was a 30-year treasury auction, and what we've seen is that bond investors are getting a little bit more optimistic about the US economy, that it's on track for future interest rate cuts, which I'm interested to see how this crap impacts interest rate cuts. We're going to check this out in a little bit after we talk about the bonds. But what we've seen with the bonds is that today's 30-year bond auction for 22 billion got some, it wasn't like great, it was good though. It was decent. And the average rate was about 4.844% after some cooler than expected inflation data that we got and stronger unemployment claims. Closer detail to demand reveals that 65.2% of that supply was bought up by foreign investors. That's a lot, but it's a little bit lower than average. They just pointed that out, and this is based on 6 auctions that they're comparing to. So the average of those 6 auctions was 67.4%. So we're down just a bit over 2%. Now, Trump says that he's racking in a ton of deals right now. So we're going to be sending out letters in about a week, is what he says, a week and a half, about 2 weeks, to let these countries know that, like, what the deal is going to be. Like he said with the European Union. So this is all coming from Trump. Trump said he's happy with the renewed China trade truce. I kind of feel like it was a little bit clickbaity as far as, and I'm thinking it even sounds that way even more because of the there was this want for more details from Treasury Secretary Scott Bessent, who is the main negotiator, the lead guy or whatnot, and he declined to give more details as far as what's expected on these tariffs on China and whether the deadline for August 12th, when that expiration of the reduction occurs. So it seems like like I said yesterday, we're kind of like doing this, like, please just accept the deal and let's go from here, and then we'll go from there. But he doesn't even want to comment on this yet, and probably just he knows Chinese officials are probably watching. In my opinion, everybody's staying updated with what's being said in the news. Also, Howard Lutnick said that he was optimistic a deal with the European Union could be reached, but Europe will probably be the very end in terms of deals, is what he's predicting to happen. So he's saying like, hey, like, there's some harder ones. We're gonna keep on working them, but they're tough and they're probably gonna be the last ones we get on board. Also, Trump with the Fed chair, and then we're gonna look at rates. So Trump also came out and commented on whether or not he'd fire the Fed chair, Jerome Powell, and he said he wouldn't, but he did call him a numbskull and still wants him to cut rates. Like, man, he's pretty much like, oh, I'm not gonna fire him, but I just wish he'd cut rates. He claims that cutting rates by 2 points could save the U.S. $600 billion a year as far as their deficit goes. So that would help out Trump deficit spending bill that is expected to increase the U.S. deficit, despite him saying it's gonna cut expenses by 1.6 trillion. You're still increasing costs. So, oh wow, so the idea of a cut slightly increased June. I mean, that one's just in a couple days, so I mean, I didn't expect that one to really move. All right. Yeah, this shooting up a little bit as far as a cut in July, but it's still low. What about September? Slightly up, so about 2% up from yesterday, I believe, and then 38.3 for 2 cuts. I'd imagine none of this has really had time to like sink in. Let's look at any latest updates. So 12 minutes ago, Israeli attacks sends oil prices higher, stock futures fall. Anything else? They call it a unilateral action against Iran. We are not involved in the strikes against Iran, and our top priority is protecting American forces in the region. So this is coming from Secretary of State Marco Rubio. Said the U.S. was not involved in Israelis' attack and warned Iran not to target U.S. forces. Oh, interesting. So there are U.S. forces, and if they attack one of them, dang. And bonds have been like in the grave so long, like people want out anytime they could get. Look at that. Look how far down we are. uh so anytime, look, they're like, oh snap, it's getting scary, let's kind of buy some risk-free bonds. And then like the people who's been just holding the bag, they're like, sell. So that's what we got today, y'all. This one right before Friday is gonna be a mess. Watch this one tomorrow. Forget the financial news. Nah, you can't forget the financial news. Watch this though, right here, tomorrow. I'll see you there. Watch this VIX. Watch that volatility index, because this thing hasn't been moving and everybody's been like, well, stocks are near an all-time high and this VIX is still low. Watch this VIX tomorrow. I'll see y'all tomorrow. Y'all have a good one.